What's up? What up? Good morning. Happy Monday morning. We live. How's everybody doing today? Hope you guys are doing great. Excuse me while I eat breakfast. Anyways, the coins are going to be reset. Everything's going to be reset today. But if you're new, I give away half an ounce of silver every single week on Saturday night for the person who has the most KCoin. You're like, okay, coach, I don't know what KCoin is. KCoin is a currency that has been developed specifically for my channel. And yeah, so you get coins for pretty much watching the stream and being active in the stream. So yeah, this is pretty cool stuff. What happened? I know, man. I don't know. I was gonna be up at 6. I was gonna be up at 3 this morning. My wife actually came in and she was like, "That's the alarm to wake up at 3." And this is kind of how I looked in the morning at 3 in the morning. I was like, "What?" So I told her, I said, it might take a few days before I get to that early in the morning because last night I went to bed still superbly late. Which happens. So I'm actually able to record the stream this time, which is cool. I got it figured out to where I can record the stream as well. It does utilize a lot more CPU usage, but I think it'll still be enough to where I can actually work it. Actually, I gotta go reset these things first. Keep watch time when resetting coins. Alright, everything should be done. Okay. Now we can get it connected up. Alrighty, cool. What up, Hector? What up, man? Welcome to the stream. Today, what I'll probably do is just look over the morning market. FUD. Look at the companies that are trading at the super lows, so the top today's losers. I've actually had some good luck with buying some very some companies that were just on the daily lows and that were undervalued or whatever. What up, Travis? So yeah, hope you guys enjoyed the video yesterday about the stash recap. That was pretty cool. Definitely nice that I'm positive. I know, man. I think if it would have been earlier, it would have been a little bit harder, but to make it, but I don't know. I'm going to try to get it around. I'm gonna try to get it to where it's for me, I guess, around the opening bell. So they're probably at 5:30 to 7:30 most days. Today, obviously, I'm starting a little bit late. Trying to get, my wife was like, "You gotta readjust slowly. You can't just be gung ho you're gonna start running a morning stream." But I feel pretty confident that it will probably work out a little bit better, so that way I could get proper sleep at night, because sitting in front of these lights at like 11 o'clock at night, 12 o'clock at night, it doesn't make for good sleep, because the melatonin in my body, I guess, doesn't release or something like that until it's dark, and sitting in front of these lights really makes me feel like it's a like middle of the day, I guess, kind of thing. So by the way, big shout out to Gestures last night, or 2 days ago, with the $2 donation through the super chat for Here's to No More Trolls. So thank you. Appreciate it. Thanks for the like. We should be running like triple coin or something. I think double coin, yeah. Yeah, double coin's up. Double coin's up today. I'm about to pull up the monitor here real quick so that way we can jump on and start looking at the companies. First of all, we'll look at some news, all that kind of stuff. Jump on the companies, and you guys know what it is. You already know what it is. We'll be doing it. Cool. When we get this set up with oh, not there. And just got to get the screen adjusted real quick, and we'll be able to start looking over the morning. So the title of this will also be different, but for right now, I guess I'm still kind of in beta testing, but this is the first time that I'm recording the stream. So I'm gonna try to bring you guys some value up front with like looking over a company or something like that, and then that way I can re-upload. And it will. I'm at, yeah, market. I think I've seen it open up like 5 points. I don't know. It looks like everything's green up here, but maybe it dropped again. I don't know. So let me get the screen fixed and adjust it over real quick. Because I heard someone that the Dow opened like 500 points low or something like that. I don't know. Or kind of, since I'm a more long-term investor, like where the market opens today is not really, I guess, as big of a concern. But this is Finviz. I really like the website there that they offer. I don't know if you guys can. It'll be hard to see, but we're gonna be working on getting some faster internet up in here. So just bear with me. Bear with me. So these are the top gainers. When I first started like day trading, I would just come here and like trade these ones because I didn't really know what I was doing. And then I figured out that I don't really want to day trade anymore because it's, you know, pretty hard to do. So it looks like basic materials are doing pretty good. Sector is doing really good today. If you can see that over there on the chart over here, well, it's behind my name, but up above me, basic materials is all green, so that's good. But what I wanted to do is go look at the losers. So these are going to be the worst ones. Like TSM, DYNT. But what I'm looking for is more specifically, like, I'll probably end up going to screen the 52-day low companies. That's more about what I'm interested than the actual like overall losers, because these ones, I mean, honestly, are probably mostly penny stocks, except for DRFG is not, and TSM. But like that one gapped down huge. Anyway, so the way that I use like FinViz is I just go to screeners. The only thing I don't like about screeners is that or FinViz is that like every single time you go to a different page, it picks up a reward, 1,000 coin. Thanks for the like. I appreciate it. It every single time you go to a different page on FinViz, it pops up with it has a pop-up link. So I don't like that. But guys, I'm all about that saxophone. I love saxophone. So nothing in regards to price. What I'm looking for is, I think it's in fundamentals or technical real quick. So this is all debt to equity, all this kind of stuff. What I'm looking for is a 52-week low. And then we'll go to a new low. So what that's showing me is every single company that's over the past year is trading at their lowest point, which is I guess more or less sometimes an easy way to find a company that's undervalued right now. Wow, big lots. Well, that's because I think that they're done, but we'll go look at a few just to see how many we got. It looks like there's only 40 overall, so right up here there's 40 that are trading at below market value. By the way, thanks for the second like. I appreciate it. And I got to record another because it's double points. Double points today, Monday double points. Starting off the Monday morning correctly. Wow, Coca-Cola. Yo, what's up, Jesters? Welcome to the stream, man. Good to see you. Good morning. Good Monday. Good Monday morning. For you, it's probably like 11 o'clock already, huh? You're like, what do you mean good morning? This is like good afternoon. So from there, what I'll do is I'll look at the descriptive, and I don't really care about what they pay. All I care is that they pay a dividend. But obviously you want it into positive because you want them to pay an actual dividend. So that knocked me down to 18, right? Look, here's another fake news. Wall Street Journal, fake news. So, and then what I'll do is I've been thinking about trying a couple morning streams this week. See how they go. Yeah, my brother actually said that he watches a guy that gets a lot of traction in the morning, especially gaming. Because if you think about it, man, a lot of people will be up in the morning doing stuff. Like it's hot. Like people will be going to bed going to sleep at night, you know. So anytime after like around 10 o'clock, like people are starting to fade off and go to bed. So, which sucks because if you're busy during the day or appreciate it. Why does it got me log in into FinViz? I don't want to log in. What the heck? What did I click on? Probably something that was... Alright, so from there, what I'll do is I'll just look at the charts to see exactly how they're going. This is only 20 companies, so it's pretty easy to kind of look over and see exactly what's going on. And I'll zoom in a little bit more so that way you guys can see the charts. I hope it's not too blurry yet. But in regards to these, so like, I don't know if you guys can see this blue line down here, and then this pink line. Basically, what that's telling me is that it's probably in a downtrend. So, especially BCRH, but it doesn't mean that I won't go check and look at their financials. FPF. This is, I think, Mexico's Coca-Cola or something like that. Those are L brands. This one looks pretty volatile. See that? PRA. This one's got some interesting swings. Quad graphics. Wireless communications. Gold. Turkey. Dentistry supply. Alright, so I guess this is every single one of them. So maybe what I'll try to do is try to run it down a little bit more. Don't need an S&P 500. Let's see what kind of fundamentals we got. I wish there was like a under 2. Let's see if I put it under 1 if that knocks anything off. Okay. Here, advertisement. That's awesome, man. What's this website again? This is called finviz.com. It's a free, but they do run a lot of advertisements on there, but it's free. It's kind of like a great platform to start on, and you can really do a whole lot of like screening stuff and that kind of thing. So this is what we're looking at: price to free cash flow. That's what I do on my actual stream. Is it takes the free cash flow, and it puts it over the market cap. So we want something that we'll just go ahead and say under 10. See if there's anything under 10. So big. And we'll just leave that at any, see if we can pull up some more. So we got 2 quad graphics. Let's go ahead and take a look at theirs. So CUAD. Actually, let's do big lots today. Yeah, man, I think that this week I'm gonna be setting up my M1 account as well to give it a go. So. Let's go ahead and go to Yahoo Finance. We're going to look at big lots. I don't really care for retail. But I wonder if they're cash flow positive or not cash flow positive. I wonder if they operate, their operating income is positive. So I'm going to go take a look at them over on Yahoo Finance, because Yahoo Finance for me is a little bit easier as far as fundamentals go, and I don't want to look at Ethereum. Not trying to trade cryptocurrency this morning. So ticker for big lots is, I think, BIG. Yeah. So for those of you guys that are jumping on the stream, I'm just giving my thoughts and opinions on big lots. Apparently, they're hitting their 52-day low. So, yes. Looking at big lots today. So Big Lots is trading at their 52-week low, and I don't know how I should like start off this video, because this video, I think I'm recording this to my actual hard drive too, so this is a recorded stream. So I'm just wondering how I should get into like the actual recorded part. Hey, what's up, everybody? If you're seeing this video was recorded earlier during my live stream, which is called 10 at 10, but actually we recorded at 7 o'clock this morning. So thank you for joining in. By the way, these videos are meant for educational purposes only and not meant to be taken as financial advice. You're responsible for your assets and to protect them, so always do your own research. This is merely my thoughts and opinions on Big Lots. It does not constitute a buy or a sell. I'm just here giving my comments and criticisms. I currently do not hold any Big Lots or ticker symbol BIG, but what I'm going to be doing is looking over their financials and possibly a little brief look at their 10K form, just to give you my thoughts and opinions. Usually the financials actually tell a pretty good healthy stock versus a non-healthy stock, and so within like the first 10 minutes I should be able to tell whether this company is good or should be good. They are currently trading what I believe is to be undervalued, according to free cash flow over market cap. That's according to finviz.com. But let's go ahead and take a look at the financials. So the financial statement, if you guys can see this, I'll zoom in a little bit closer. But as far as gross profit goes, their numbers are increasing, but they're not increasing substantially. They are operating income. They do make money by staying in operation, so that's something that is successful. And they are increasing their operating income. So I like that also. That they are making money by staying in business from operating. And then as far as net income from continuing operations, they continue to increase that money as well. So that's good. What up, Brian? Thanks for joining on the stream, man. I'm probably catching you at lunchtime or something like that. As far as total current assets go, they continue to increase. That's something that I like as well. I like to see companies that are still growing. I mean, the last 2 years they were stagnant, it seems like, in terms of total current assets. And then as far as total assets, they increased about $50 million. But as far as compared to 2015 or 2016, my bad, they increased only like 10 million. So it's not a huge increase as far as total current assets or total assets goes. My interest would be in liabilities, though, more or less, and it roughly stayed the same. It did increase quite a bit more as far as percent goes with as far as total current assets. So total current assets over the last 3 years has increased only $10 million, where total liabilities has increased roughly like 70 million. So that's not the most that's not something that you like to see all that much. But without running a full analysis, I wouldn't really know. And then we'll go look at the cash flow statement. So they are total cash flow from operations. They are operating still cash flow positive. So that's interesting right there. And they do have apparently $12,000 left over in cash and cash equivalents. And they took on more debt than they did the years past, but obviously they made some more money. And they're paying dividends, which is good. So what I'm going to do is I'm actually going to pull them into my actual stock sheet, because so far, like, I didn't see anything that says like why they're trading at a 52-week low. Does that make sense? So based upon their financials, nothing said that they're why they're trading at a 52-week low. So we're gonna go take a look to see. Retail's one of those things that's hard though. But cheap retail actually does, like cheap retail like Big Lots and companies like that, they do really well actually with when the market is doing pretty bad. Like Dollar General, those kind of stores do actually better when there's less money in the market, when we're going through like a recession, correction, that kind of thing. Obviously employment rates are still up and that kind of thing, so people are still making tons of money. Let me rename this real quick to BLG. So as far as I'm just gonna leave that alone because not gonna try to get too much into like, do you understand them yet? Just more looking at from the fundamental side of it. For instance, like their solely their financial statements is what I want. So capital employed, we're gonna start with 2015 and move our way in, and then we'll go 2016, 2017, 2018 as far as the years go. 2016, oops, sorry if I bumped the mic right there. 2017, 2018. So obviously 3 years is not enough. All right, cool. That and Fastenal. Hit the like button. Got to see you tomorrow for sure. Have fun at work, man. Appreciate it. Thanks for just coming on and leaving a like. Means a lot. Right? And that silver should get to you soon, I think. Well, they'll just see a video in Granger for sure. I'll definitely keep that in mind. Maybe looking into like tomorrow or something like that as well. So what we're gonna do is they're gonna look at just the 3 years. That way we can get a breakdown on like return on capital employed, free cash flow, return on capital employed, and so on and so forth. So that way we know a little bit better on how the company's been doing in the past, and then we'll look at their value. But really what should be done is what should be done is that all these questions need to be answered as well. So like as far as like, do you understand them? What kind of product or service do they offer? Is it a product or a service? Who's their customer that they serve? What industry are they in? And then what form of company are they? Where's most of their stores? Where's most of their customer base? And then what's the status of their company? So that would be, I guess, if you understand them. Because when you go to look at buying a company, you got to come from the standpoint of buying the entire company. And that's why for me it's hard to buy companies like Tesla and Snapchat, even though I own shares of Snapchat right now, because they don't make money by staying in business yet, which is very concerning to me. I mean, most businesses obviously at some point or another don't make money by staying in business. That's why you got a startup, which means that there's more money to be made in those companies that are not making money at the beginning of when they start up. But I think at some point, playing it safe you would expect a company to be making money before you looked into investing. Not hating on Tesla, just saying that they don't make money from staying in business. So we're going to look at, first of all, the income statement, which will have, oh, this is actually assets, my bad, asset classes. Balance sheet. So we're going to look at total assets. Total assets minus excess cash, which is excess cash is right up here. Cash and cash equivalent. So they did $51 million. 51176. See you later, fam. Yeah, man. Have a good one. Enjoy your day. I'll see you later. And from there, then we're going to go ahead and calculate the non-interest bearing current liabilities, which is down here. So this is current liabilities. Obviously, I don't have any interest bearing liabilities. I don't have any short-term debt or other current liabilities. So the total current liabilities is this number right here, 589,608. 589,608. And boom. And then we're going to go do the same thing for 2017 and then 2016. That way we can get a little bit better picture on how the company is doing all together. So we got to go find the total current assets again, which roughly they haven't increased. So I would say that it's just based upon how their total current assets are doing. I would say that they're probably not going to be good in the past as far as increasing profit goes, but that's just my guess right now. Cash and cash equivalents 51164, and then minus total current liabilities right there, 678,595. 678,595. And then we're gonna go to 2016, and we'll put in the income statements, and we gotta put in like free cash flow, and that should give us a little bit better picture on where everything is going. So let's go ahead and get that taken care of as well. Oh man, put that equal sign in the very back. Minus cash equivalents 54144. 54144. And then total current liabilities 678,448. 678,448. And then we got to put in operating income, which operating income is pretty easy. It's just on the income statement. It's going to be towards the top. Operating income. So 301,353. 301,353. Yeah. Okay. Cool. Wow, that's a great return on capital employed. 249,390. Oh no, right here. 248,003. 248,003,000. And then lastly, 235,787. 235,787. And then we got to also put in the free cash flow, because what it's basing this on right now is, okay, so that's just based upon operating income. This one is the one that we need to look at. Yeah, so this does free cash flow, return on capital employed. So this is in the free cash flow, or the cash flow statements. Important stuff. And run it down here. Total cash flow from operating activities right there. That's what we want. 250,368. 250,368. And then we're gonna do minus capital expenditures, which capital expenditures are right here. So 142,745. 142,745. And in this one, 2017, 311,925. 311,925. Boom, 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 boom. And then capital expenditures 89782. 782. And then the last one. 342352. 342352. Equals, and then minus capital expenditures 125989. Minus 125989. Alrighty. And stockholders' equity and stuff like that, we'll look at it here in a little bit. But look at their return on capital. I don't know if you guys can see that, but basically their return on capital employed is really, really good. So I don't understand why they would be trading so low at a 52-week low, unless they had like a bad earnings statement this month. Without looking at their 10K, I would think that they would look pretty respectable as far as like over the long term, especially as far as return on capital or free cash flow return on capital employed, and then also return on capital employed. So basically for every dollar that they spend, they get basically $1.28 back, and that's pretty good. But we'll go down here and at the bottom and see if it actually is truly undervalued by looking at their market cap over free cash flow. So 1,721 billion. Yeah. So it looks like they're at a 16. That's what I would assume. We'll look at enterprise value. So they would say they're a little bit overvalued as far as market cap over free cash flow goes. They're 16. I would like to see them around an 8. And then EV, enterprise value is what we want to look at also. Enterprise value, BIG 2144. Oh, never mind. It says it's 1892. 189200000. So enterprise value over operating income, they're actually at a 6. So that's, we'd like to see that below a 7. So that's interesting that we're getting a market cap, a free cash flow of 16 and 8 enterprise value. So I would say that, I mean, just based upon fundamentals alone, I think that you could be potentially looking at a stock that is poised to be undervalued at this point. Let me go look at their tangible book value and that kind of thing, because that'll give us a better picture on, oops, sorry for scrolling down too far, as far as their market cap over book value and so on and so forth, which we would like to see those at 3s, but I haven't updated either of those yet. So let me go get those updated, and then we'll move on from there. So stockholders' equity is going to be on the financial statements, which is on the balance sheet because it's assets under liabilities, and then stockholders' equity. So this is the net tangible assets right there. So total stockholders' equity is going to be 669,587. 669,587. Let me just make sure that that's correct. 669,587. All right. And then tangible value is So the reason why you do tangible book value is because typically companies either buy things, buy companies, all that kind of stuff. So intangible assets. So it would be that. Minus, we got to go see if they got any intangible assets on their balance sheet, which is going to be under their asset classes. And then we're looking for intangibles right here. So they currently don't have any intangible assets. So their book value and tangible book value is going to be the exact same. So as far as the rating goes on that, market cap over tangible book value is going to be trading at a 3. So from here, what I would do is I would start looking at do I understand the company? Because obviously, to some degree, they are undervalued based upon enterprise value. I would say as far as market cap over free cash flow, the answer is no, they're not undervalued. But they're not ridiculously overvalued. Like I've seen companies that are like 25 or 43. So that's still pretty good. I think that honestly, in order to get to a 7, they would have to drop down to like I think that they would have to go to a 9 like that. Yeah, so probably be at 8. So we'd like to see them at an 8. That's so around 90 million, I think would be the correct. Let's see, thousands, millions. Yeah, so 900 million would be at around the point that they would be undervalued as far as market cap over free cash flow. But yeah, that's Big Lots. So return on capital employed, they've been crushing it, which is so interesting that their stock has been fading. Like I wonder why there's on the actual chart what their stock has been fading over the last. I'm just looking at the 5-year chart here. Nah, that's maximum. Like they've pretty much been just chilling. And then they're starting to tail off now. Like they haven't increased really that much from, I guess they went from like 43 to 63. Now they've been dropping off. Maybe people are just taking profit today or something. Cheap dividend stocks to profit from. Big Lots give big kids for point of sale donation campaign. So 20 days ago, retirement of president and CEO Big Lots. So that's probably why he's a new CEO, at least as far as news goes. What's up, Joe? Welcome to the stream, man. Good to see you there. Good to see you. Good to have you on. Thanks for the like, by the way. So it would just be, I guess, more interested to look at their 10K and figure out what exactly is going on, if there's anything going on for this trail off. Let me go look at their actual quarterly statements, because they, give you a little bit better synopsis on how the company's doing. Closer, maybe they just had a quarterly earnings report that was subpar. Boom, boom, boom. I wonder when they're supposed to release their financials. I think we're coming up 4 months. March, April, May. Yeah, it's probably coming up. They probably just released them. So doing better than the last 2 quarters. Yeah, so they'll re-release them here around this point. So they probably just released them. Well, they're still staying cash flow positive, or operating income positive, and cash flow is probably cash flow positive, except for one month, one quarter. I don't know what people got against them then. I'm gonna pull them up on Robinhood real quick. They're a $40 company. So I couldn't really put them into the way that my portfolio breaks down right now. I really couldn't put them into a portfolio. That's not to say that I wouldn't want to, but I think that it would be interesting to look at them on a different platform. So this is quarter 4. Is expected pre-market to 25th. So it's really not. It looks like it's a company that's not getting that much traction. It's hard though with brick and mortar retail. For me, it's something that I guess is hard. Like, I don't understand. This drop right here doesn't make sense. Well, it does because. All right, it does because this is what the Dow did. But my question is, why is this drop? It's dropping differently than the Dow. Like, it dropped with the Dow, but now it continues to drop down. They do pay a 1.73% dividend. I like that. That's good. So maybe what I would do is I would just look at what it's got to drop. So it's got to get down to 90 billion for that, for the right purchase price. As far as market cap over free cash flow goes, but then also the enterprise value is going to drop as well on that. So it says it's up though, $5. That's probably because it bounced. Oh, it's up $5 over the past 5 years. So like that return, I don't know if like for how they've been doing, it doesn't really make sense. But the 1 year they're down, 3 month. Most companies are gonna be down 3 month though. And maybe their earnings call on February 3rd was bad. They had an earnings call on February, let's see. Yeah, I think February 3rd or something. Looks like it's just bouncing around a lot. I wonder just why they came into this trough. It looks like this company seems to do that though, with like a steep drop. Like here's another time that they did it, 8 August. So I'm gonna look at, here's another one. I'm gonna look at their can you take a look at 2? What's 2? My bad, I don't know. You got a second stock that you want me to look at? I've got till 8. I've got till 9 o'clock. So yes, I can. Take a look at the second stock. But without doing more research, I want to be able to tell with big lots if it is I guess going to be a good stock moving into the future, because I don't know where their suppliers are, their supplier base comes from, who their customer base is. I mean, I could honestly guess their customer base is probably the end retailer, because they are a retail store. So their customer base is probably not consolidated. But like then they got but their supplier base where they buy their stuff from could be limited. So just some thoughts. Take-Two. Oh, okay, yeah, Take-Two. I know what you're talking about. The gaming stock. Right here, interactive software. One second. Let me put this on here. Don't have a pen. One second. Let me grab a pen real quick. Travis, you're hardcore going for the silver this week, huh? Dang, so their price is 108. That's, for me, that's a little bit much on my portfolio just right now, I can tell you. Especially my Robinhood account. To buy an entire share, but if you're looking at fractional share investing, then that might be a little bit different. So this is going to be at 52 minutes into the stream. We're going to look at Take-Two, and then also we just finished with PNG or something like that. So more than likely, the first one won't be uploaded into the stream, but I'll try to, since I'm recording this stream, I'll be able to run back and hopefully maybe not use this stream, but this week I'll be rewatching my streams as far as recording goes, and so that way I can figure out what exactly is the best for re-uploading the videos. But let's go ahead and take a look at Take-Two. This is going to be a brief look at their financials. This question did come from Travis McMaster, not McMasters. He's not two people. He's one. And he's not a McAllister, but I feel like I mess it up every single time because I don't know why. That's just crazy. And I'll apologize again. I'm sorry. I'm sorry. Gross profit. Wow. That's good. That's a growing gross profit. I like that. This is the first year going, so they should be producing, if not already produced, their 10K for 2018, because their last report was in 2017, literally over an entire year ago. So I don't know why they haven't updated that. Which I might have to go to their actual website to look, because if it's literally like that number is literally so old. Oh, they do Borderlands, huh? Or Red Dead Redemption or something, I think. Yeah. Take-Two 2K. I'm gonna go to the corporate overview, I think. Corporate financials information, SEC filing, 8K. When's their 10K come out, man? Annual filings. So their last 10K, which came out in 2017. Okay, so Yahoo's just a little bit off. That's okay. So last year's numbers, I mean, quarterly. This year though, gross profit is staying similar across the board. doing, I can just tell you by looking at the numbers, doing better than it was quarterly. They're going to have a better number just based upon the last 4 quarters. So that's a 2, roughly 2, 2, 2. So it's going to probably be around $900 million in profit, gross profit, instead of 800 million. Operating income or loss, they're generating an operating income, and as far as that goes here, they should be operating income positive as well. Even if you disclude the last financials in 3/31. So that's good. I like to see it. I kind of made myself a rule that I won't invest into companies that aren't operating income, aren't making money by staying in operations. I think that that's a good guideline to follow. And then balance sheet. This is like a lifeline, the breath and lifeline of a company. Total current assets continues to increase by about 200 million every single year. Total assets increases. They like almost, well, increased about the same. Let's say that's a 3. Moving from, well, actually almost a 4. And then if do 4 again, would put them at, yeah, so about 4 to 500 million as far as total assets increase. And then total current liabilities or liabilities in general, pretty good. It's growing, but it's not like substantial. They did move a lot of, they are picking up a lot of intangible assets. So that would be something that I would be weary of. And then as far as cash flow from operating activity goes, they are cash flow positive, and that is increasing. So as far as in the past, yeah, I like that. And definitely low capital expenditures. So like the other company we're looking at had a pretty big capital expenditure. This one has a pretty low one, so they probably should get a good value. And then changing cash flow equivalents, they're cash flow positive. I mean, they got remaining cash left over. They didn't take on any debt, so that's interesting. So what I would do from there is I would go and look into see whether they're operating cash flow positive or not. So what I'll do is I'll just do a real quick market cap over free cash flow. Free cash flow equals capital or free cash flow from operating, and then also, so back here we gotta go. Oops, sorry. So total cash flow from operating activities, so 331,429, and then minus capital expenditures. So 331,429. 331,429,000 minus capital expenditures, which is 21,167. 21,167,000. That's because everything's to the thousand, so you got to make sure you put those zeros in there. So then we just got to go find the market cap, which is pretty easy. Tells you right here on the summary breakdown. The market cap is 12.418 billion. 12.418 billion. I think that's correct. Yeah. Alrighty. And then it's market cap over free cash flow. So that divided by that. So they're at a 40, huh? I think that's right. Yeah, market cap, free cash flow, yeah. So I would say that they're pretty overvalued based upon that number right there. But that doesn't mean that doesn't necessarily mean that they're a bad company. It just means that I would say that they're overvalued in the sense that they're not cheap. That could be the normal price for them. I'm just saying that it's not cheap. And then we'll go look at their enterprise value. Value of Take-Two. So they're roughly 10.69 billion. Actually now 11.13 billion. So 13 billion. I think this is how you do. So 11.13. And then their operating income, which is going to be on the financials as well, is 91305. Right here, 91305. 91305. Enterprise value divided by operating income. So yeah, they are, I would say, close to I would say they're pretty expensive. It looks like they didn't make a whole lot of money, but I think everything is kind of different. But also you got to take in consideration that this number right here, their operating income and loss, is literally over a year old. So possibly not going to get the best value. I mean, a better way to do it might be to even just add these four numbers up right here, and then put them into the free cash flow. You might get a better number, because like that's going to be, I think all numbers are still in the thousands. So like you're going to get like a 40, 50, we'll just say like a 160. We'll just go ahead and throw that in there, 160. Wait, what? That makes sense. Oh yeah, 160. Okay. That does make sense. I can see now. So we'll just throw like 160 in here. So yeah, I would say that they're still pretty, they're not cheap, I would say. But it doesn't mean that they're not a good company. I think as far as like the financials go, they look pretty solid, and they are definitely, they definitely seem to be growing. I mean, based upon that like gross profit and operating income and that kind of thing. So 2-3 years ago, like they were doing really bad as far as operating income. Now they're operating positively. So yeah, can't say buy, sell, because that would be a recommendation. For me though, not something I'm going to look into, because it's trading at $108. And as far as like breakdown goes on my actual brokerage account, my Robinhood account, I only have one slot to throw a stock in, and that would be into the dividend stocks, and I can only afford $22.95. So it'll probably sit around and wait for a while. But I am looking at picking up 2 stocks today. I'm looking at picking up SFS and XXI. Both of them I can pick up about 1 share. So I got limit orders placed on those, but I don't think I'm gonna get into them today. just because of where my limit order is at. Yeah. But I'll probably be on for just a little bit longer. Like I said, I'll be wrapping this thing up at 9. So this will be, as I move forward into getting things more cemented into the ground as far as live stream capability and that kind of thing. It'll be good. I'll probably limit them to just strictly 2-hour live streams. I do like it in the morning because it forces me to get off the stream. Typically, I'll stay on longer than I should because I'm having such a fun time. The 9 o'clock or the 7 o'clock in the morning, I don't think is the best. I think that running through a which reminds me, I need to hit up the wife to get our M1 login, so that way I can open up a IRA and then transfer my IRA from my Roth, not from my Roth, from my 401k into roll it over into an IRA, and then I'll manage the IRA side of it while my wife manages the actual just general investing account. Which, by the way, yeah, my personal opinion, my personal take on gaming stocks is, let me just go ahead and catch up to the live real quick. So I got to keep track of a little bit of time because that way when I go back to edit, obviously it's a really long stream. So when I go back to edit the stream, I'll know where exactly to grab and so on and so forth. So it's going to be roughly around, we'll just say 107, 106, 105. Cool. So as far as my opinion goes in regards to gaming stocks, it's not that I hate them. It's not that I don't like them. It's not that I have... It's not that I'm against them. It's not that I don't think that they're good or anything like that. It's just, I guess, more of a personal bias on gaming stocks. I totally know. I gotta do one more edit, but that'll be for a different day. So as far as gaming stocks go, I guess I have a personal bias. I would say not a personal bias. I think it's more logical. But again, that could be a bias on myself. Is that gaming stocks rely very heavily on different sectors to do well before they can generate the profits that they need to. So for instance, say that Xbox sells and PlayStation 4 sells, or whatever the new console system that's coming out drops significantly. Well, if it drops, say Xbox sales or PlayStation 4 sales drop, we'll say 30%. That's still that, because that gaming system sales drop 30%. Potentially gaming stocks or a certain stock could drop 30% as well, or if not more, because people obviously just because of the sheer numbers, less people using gaming systems, less people buying the game. So obviously now, since we've become more accustomed to using our phone and playing game on our phone, it does kind of limit some risk. But also, like, what if there's a trend that catches that people don't play games on their phone anymore? For instance, I remember back in 2008, 2009, 2010 when Farmville was like huge, but now like no one plays games directly through the social media platforms. They used to have it set up to where you could like play like little mini games on specifically Facebook, and I'm sure that they still do have that capability, but I don't see many people doing that. And I guess without seeing statistics, I wouldn't really be able to make a big generalization. But personal experience says that not very many people are playing games directly through Facebook anymore. Also, it relies on technology. Gaming consoles rely on technology continuing to grow as well. So for instance, like semiconductors, CPUs, GPUs, hard drives, RAM, all that kind of stuff. It requires that stuff to also increase so that they can come out with a better gaming system. For instance, if they release an Xbox 1.2 or whatever, and it literally had no different hardware, or maybe just an increasingly better hardware, would people be willing to trade in their Xbox One to go buy the Xbox 1.2 with like literally minor upgrades in it? For instance, maybe they just took a 500 gigabyte hard drive and swapped it out with a 1 terabyte hard disk drive, and that was it. People would not. I don't think that people would go buy a better gaming system. So I think that there's some factors that go into gaming that people don't take into, because we don't realize that it has to be played on a device, whether that be a phone. If a phone technology never increases, then the gaming capability on the phone will never increase as well. So I think that that is something to consider when looking at gaming stocks, is that just because it looks good on paper, you got to factor in how are these other companies doing as well. How are like Intel, how is Microsoft doing as a whole, how is Sony doing as a whole, how is Nintendo doing, and then look at the companies that are developing the hardware that goes in the computer as well. And then there also relies heavily on these companies being able to come out with new systems, and requires the engineers to create and market that. First of all, create a better system, so whether that's a better graphic user interface, more stuff as far as what the consumer can do with the system, the interaction between the consumer and the system, and then also the hardware components that go into that as well. So if the hardware is not getting better, if the technology or the graphic user interface, the relationship between the consumer and the console is not getting better, then the sales possibly will start to decrease. And I think maybe there'll be a shift in the trend that people go from not gaming on consoles and computers to maybe more of like a phone type of game or something like that. But even then, we've had our phones for quite a while, so we'll see where that goes. I think that we might be moving into another era as well. So that wraps up the little rant on my bias, my opinion on buying gaming stocks. I actually did do a value analysis on Activision Blizzard, and feel free to check that out up in the corner, not on the live stream, but on the actual video. You can check that up in the corner, and feel free to let me know your thoughts on that one in the comments on that video. I would appreciate it. But I think that gaming stocks have quite a bit more risk than people like to think that they have. But it's been real, guys. But I'll be on the stream for another 30 minutes. If you guys have any questions, feel free to post them down below. It's gonna be so cool. That's gonna be so cool now that I can record the stream. I hope that this stream is actually going to be like 1080p or something like that, as far as what I've recorded it at, because that would be really, really nice. It would really make my day. If it doesn't, if it's not at that, then I don't know if I'm going to be as happy, but I'll still try to be happy. I mean, I'll keep it positive. By the way, Breakfast of Champions, blueberries. If you're new to the stream, I give away half an ounce of silver every single Saturday. You're welcome, Travis. I think the next stream I'm going to try to fix this chair because look at, I'm faded, man. It like just drops like this. And then you got to fix it. It's like, oh, it's fixed, and then it just drops again. So I don't know what it is, if it has to do with the hydraulics in or something, but I'm always ranting about this chair. I've been popping, and I feel just like a rock star. Man, but I'm really interested to look more into that Big Lot stock. Just because of how it's doing. Like the numbers, I feel like are really, really good. I mean, at least the numbers that I've seen. Except for this one. This one was not good. But it needs to be at 90 thou. And it was at, I think, like 100 and something. So it means it's got to drop. The price on that should drop. But then if that price drops, this should drop too. So, I'll have to look a little bit more into that one. Maybe I'll go ahead and run up a value analysis, an in-depth review into, an in-depth look into Big Lots stock. It's kind of weird because I'm used to filming at night, so I don't know if that'll throw people off. Just a thought though is doing, if I'm able to, or what I might do is try this month to find a better time that works great for me, and then also works the best for you. 10:30, 8:30 was working. I think it will work most days, except for Monday. So Tuesday, any day that I'll be able to do a night stream, I'll probably do it at night. And the ones that I can't, I'll just film in the morning. Which will probably be like Friday night, Saturday night, Tuesday night, and then Monday morning, Thursday morning, Wednesday morning. I think that should work. Yo, it should work. Fading, see? Taking the elevator down. Nah, but I'm pretty happy. Thoughts on LGBTQT? Yeah, I think that one's labeled on Stash as LGBTQ. I don't think that's what it's actually called. And my phone's off right now, so let me pull it up on the actual. I gotta just log into Stash real quick. I know which one you're talking about. I hold $20 in it. But I'm just gonna see if I can find it real quick. I think you're talking about Equality Works. Yeah, EQLT. The strategy behind. So besides just looking at let me get reset up so that you can see the screen. Travis. Eventually I'll have it set up to where it'll be two different ones and then I can just click, but for some reason my computer is not liking me when I use it. I'll be back real quick. I'm just gonna go check on my son to make sure that he's not awake yet, and then I'll be back. So I had a feeling that this might happen, but I'll be right back real quick, and then I'll get to your LGBTQ. Alrighty, so he's up, but he should be fine for another 30 minutes. Unregulated, self-entertained. But first what I like to do is I like to just go look at the actual ETS page and kind of get a little bit of a feel for the company and how it works. So it's an index that provides means of tracking companies which support workplace equality for lesbian, gay, bisexual, and transgender employees. It consists of 246 publicly traded stocks. Stock must be traded on the exchange and must have a minimum market capitalization of $250 million and an average daily minimum trading volume of $200 million in prior 3 months to be included in the index. The stock in the index are weighted for... So I guess as far as strategy goes, it doesn't look like they have like a strategy on like, it's not like looking, I don't think it's really looking at just based upon the strategy. It doesn't seem like it's looking for like growth. I think it's more of a stock that I think is like a passionate kind of stock, or like a belief more or less, or a belief ETF. If that makes more sense. It's like no one, like, it's like if you think that factory farming, or for instance like the way that we grow corn, potatoes, rice, beans, soybeans, or whatever today is wrong, especially corn, the way that it's been genetically modified. So you don't like companies like Monsanto, but yeah, you're like, oh, I'm gonna buy farming to invest into the farming sector, but like every ETF has Monsanto, and someone's like, this is the organic ETF that only holds organic or locally grown organic ETF, and it only holds companies that are in that are locally grown and organic. Whether the actual sector or those companies are going to do well or not doesn't really matter, because what you're buying in is the support, I think, of those companies, more or less. I do like the fact that they do have like at least a like minimum, so like a $250 minimum, and then a $2 million daily trading average in the past 3 months. So I think that that's good. I'd be interested to see the performance, and then we're going to go look at the holdings as well. So as far as the 1 year goes, they've done 12.29%, 3 year 9.52, and as since inception they've done 10.54. So the S&P 500 index has done 13.99, 10.78, and 11.4. So you'd be better off basically with investing into the S&P 500. However, maybe you want to invest into something that you actually have support in, or whatever it may be, then I mean 12.29 is not that bad compared to 13 point. It's like about a 2 point, roughly a 1.7 better percentage return. The top holdings. This is what holdings 246. This is the top 10. I want to go to the full list. So this is by weight. Sears Holdings. I think that Sears is going under. So, like, remember I said Monsanto? Look at that right here. A lot of them are just gonna be, for me, what I've like. This is just companies that have policies that like don't discriminate against sexual orientation. I don't know if they necessarily like so I would say maybe they don't like they haven't furnished statements on like whether they're against or for it, which I don't think companies really necessarily need to say either I'm in support or I'm not in support. I don't think that companies really need have a need to take a stance on social issues. I think that from a business standpoint, though, what your employee does on their personal time is none of your business. As long as they are a phenomenal employee and bring that company value, what you pay them is the value that they bring your company. I don't see a problem with what they do on their free time, as long as it's not affecting the workplace performance or output that the business has. Well, that's just my personal opinion. So a lot of them are going to be just probably a lot of big names that we've seen, like Microsoft, Boeing, Apple, which is weird that there's not bigger holdings in here. I don't know how they would break down the percent. Like, it looks like they all have, it looks like it's like, oh, well, let's just keep it under, like, keep it around 0.4. Avon Products is right there, huh? Interesting. But it just looks like, for me, it just looks like a lot of big companies that have actual policies on this kind of thing. A lot of small businesses aren't going to have policies on it just because they don't. It takes a lot of time to write that stuff up. But I think that this is just companies that have policies on workplace equality. Because even like it's like, oh, these are the top 10 holdings, but really, like, it's not even like there's not much of a difference between a 4.9 and a 4, like, or a 0.9 and a 0.49 and a 0.4. Like, there's not much of difference as far as like holdings go. I just wish that they would take the like workplace equality and then maybe try to add some strategy behind what they're investing in. not just the only proponent is like they have workplace equality policy, and then they're trading at a certain level as far as market cap and then daily trading. I wish that they would try to add some more strategy in there to get some growth. But like, I guess it is to some degree a decent tracker, because a lot of the S&P 500 companies and that kind of thing are going to have those policies and procedures put into place. Characteristics. So this is telling relative weights as far as compared to the S&P 500. So they're more exposed into consumer discretionaries, not exposed as much into energy and information technology, which I think is why they haven't had as much growth, because IT has done pretty good. I want to go to the overview though real quick. Just the main page. Screening criteria including mandatory language and companies' equality opportunity statement prohibiting discrimination. So yeah, so this just has to do with their equal opportunity employment statement, basically. Other screens are performed with the goal of eliminating companies that would detract from the index, such as companies in bankruptcy or reorganization. So, for instance, like maybe like a GE or something like that wouldn't make the cut because they might be going through like bankruptcy or reorganization. So, I guess that's like the other strategy that they apply. But I wish that they would maybe seek to grow faster. Maybe like do like the 256 companies or 246, but maybe either apply some value analysis to it or something like that, to where it's like, okay, well, we rank these, or maybe just rank it with market cap or something like that as well. So base market cap percentage. So for instance, like Apple maybe would be the top holding there. I mean, it would be hard. I would say like do it based upon the number of employees that are lesbian, gay, transsexual, or transgender, lesbian, gay, bisexual, transgender, LGBT. Like maybe do it upon the percent of employees that they have that like would fit into that group. But I think that's non-disclosed or confidential information or something along those lines. Especially, I don't think it's released to the shareholders or the public. So, but I think that it would be cool if they had a percentage. So it was like, oh, well, you got 30,000 employees. 1,000 of them say that they're either a lesbian, gay, bisexual, transgender, and so from that, like 1,000 of them based upon 30,000 is what, 3% or something like that. So we hold 3% of our portfolio, and you guys or something. I don't know. It's just an interesting, I guess, maybe way to look at it. Something along those lines, or maybe just base it upon market cap or something. But I guess my only concern, as far as diversity goes, the portfolio, this ETF is pretty diverse. 246 holdings, none of them are above 1%. That's really diverse, which I think is why they haven't had as great a return as the S&P 500. But I wish that they would try to add some more strategy to it. I want to go look at the actual chart though, real quick. I forget the ticker is EQLT. So obviously they have been increasing. This is the max since the inception, basically, since 2014. It did get hurt right here a little bit. So it looks like 2016 was the time to buy. February. Sorry about that. Camera went out. But yeah, that's what I would look at. Obviously for you, I know that that's something that you're passionate about. So it's kind of like maybe investing into it. And I think that that's like, when I look at that company, I'm like, or look at that ETF, it definitely increases. So it's definitely getting returns. It's not as good as the S&P 500, but it's kind of like, I believe in this, and like I want to support these companies that support equal opportunity. What's up, Green Ghost? Good morning, man. Welcome to the stream. Good to see you. Thanks for hitting that like button. I gotta grab the battery real quick. I'm back. But like, it might be like one of those things that you're willing to take a little bit less of a return in order to support something that you actually believe in, and give a crap about. Or if like you just did a normal S&P 500, you're like, I don't really care about it. It's getting me returns, but I care about this, and so I'd be willing to sacrifice a little bit of return to support that something that I actually give a crap about. For instance, for like me, like I'm a vegan, so like buying, if there was a ETF that was like no exploitation of animals, something like that, like, and looking and the return on that was around the same return as the S&P 500, maybe a little bit less, like this one. That might be something that I would look at sacrificing and being like, well, I know that S&P 500 does this, but I'm willing to take 1.5% less return in order to invest in companies that I actually care about, give a crap about, and believe in the purpose, the reason why they exist. Obviously, these big companies, I think that they just put that into their policy so that there's no like repercussions as far as like lawsuits and that kind of thing. But I think that I would look maybe even to single stock companies that are in more support of that. For instance, I think that Starbucks is one of those companies that really celebrates equal opportunity and that kind of thing. Yeah, you're welcome. So Gringos, we've been looking at changing up the stream. By the way, this stream has been recorded, so I will probably end up pulling some of the stuff out of it and re-uploading. So if you miss the stream, it's alright, it'll get re-uploaded, and then also the titles on these streams will start getting changed to exactly what I talked about. So that way, if there's no confusion, it won't just be like my first stream, my first morning stream. But we're gonna try to get some streams that will be during the open of the market. So for instance, it'll be around 5:30 in the morning, my time, to 7:30. Obviously, it was a later start, stayed up a little bit late last night. It was our last day house sitting, but yeah, super excited to see where this one goes. If you're new and watching, I do give away half an ounce of silver at the very end of the live stream on Saturday night, and it's to the person who has the most points, who's collected the most coins the entire week throughout the live stream. So you get coins by watching the live stream, being active in the chat, and so on and so forth. And as I move forward into getting an actual schedule, it'll be a little bit easier for you guys to get those coins, because right now it's kind of like hit or miss. When am I going to be on? It's all surprise. So, and I understand that. That's why I think that's what we're really looking at doing moving forward into the future, is really getting a really concrete schedule for the live stream. My concern was the last couple weeks was, will I be able to record the stream? Does my computer have enough processing power to be able to do that? And so we will see how this stream ends. I've been recording this one the entire time, so we'll see how the stream actually looks as far as recording goes. And if it does work, then I guess for me it will give me more motivation to get a actual set schedule for the live stream, because I will be able to grab some content from there to reuse and that kind of thing. So yeah, this stream I actually, if you want to go back and rewatch, I covered Big Lots, I covered Take Two, which is a gaming company, and I also looked a little bit into Workplace Equality ETF, or EQLT. And then I gave my thoughts and opinions, comments and criticisms on why I have a hard time investing into gaming companies. And probably more my bias on gaming companies. Yeah. Plus, with the morning stream, I won't have to worry about the vault screwing up like it has been screwing up the last couple nights. So, especially on Saturday, it like screws up. It doesn't like me. Hey, me, I'm in first place. Yeah, we'll change that here soon. But Big Lots looks like it could potentially be a good company right now, undervalued company. Just want to know much without looking specifically into their 10K as far as suppliers, that kind of thing, what they do, where they're going, if they have any regulations and all that kind of stuff. Congrats, you won 2,000 coin. But anyways, guys, it has been real. Keeping it real, keeping it real, keeping it right. Thanks for hanging out in the morning with me. I'll try to do it earlier next time. That way we can get some more people on here that gotta go to work but can catch the morning side of it. Tomorrow I will be releasing my Acorns recap April edition, so be on the lookout for that. That account has actually was my worst performing account this month, so it's kind of sad, but I think that's because I adjusted the portfolio last month. But be sure to check that out. And then also I think I'm going to do another Stash Retire recap this month as well. Last month I did one and it seemed to get pretty good traction. I think a lot of people enjoyed that. So yeah. Anyways, guys, thanks for hanging out with the morning with me. Feel free to let me know in the comments or in the chat if you like the morning style stream. And as we continue to move forward, I'll still continue to write content and talking points and that kind of stuff, and we'll actually get a real good setup on the actual stream. So what I assume will happen is that the first part of the stream will be some talking points that I want to cover for about the first hour or so, and then we'll go to a quick commercial, come back, and then we'll do like a Q&A in that kind of thing. So even if you ask your question in the beginning and I don't get to the second hour, it'll be fine, because I'll just take that question and re-upload it to the stream, or not to the stream, but re-upload it to the channel. So if you're like, oh, I gotta peace out, but I asked the question, it'll still get answered, as long as provided I have enough context on the actual question. So I'll be taking